Welcome to Financially Free Podcast with your host, Nay Torres. One of the reasons Nay could retire when he was 25 years old is because he was coached by the best. And now, through this podcast, so can you.
Welcome, everybody, to the podcast. Today, I want to introduce you to what I think is simply the best coach in the world if you want to do trading. I personally been in his seminars like a decade ago, and I can tell you before meeting Tharp, I was looking for the perfect trading system. I just thought if I could find this right system, I will make money. And then I met you, Mr. Tharp, and I can tell you, you turned my whole world 180 degrees. And not only to trading, but I have had some really important life lessons. And I want to thank you, and I want to honor you with this podcast, and welcome to the show, sir.
Thank you very much. I'm glad to be here. My objective in my business, and it's one reason I probably won't ever retire, the mission is kind of transformation through a trading metaphor. So we're about changing lives. And, you know, when we change lives, people then can trade better. But quite often we just get all these love letters about how much you've changed my life. And that's what keeps us going, and that's why I can't imagine ever retiring.
I can tell you something. There's very few things that actually can turn into such a psychological school for any professional like trading. I've done, digital marketing, started a couple of businesses in sales. I retired through real estate very young. But I can tell you there's nothing like turning on that screen and looking at the little dot go up and down to drive you crazy. So if you really want to do trading well, you need to do psychology first. You need to work on yourself, and that takes you to another level. What you did 40 years ago almost is you took NLP modeling of the most successful traders in the world. What is that?
Well, actually, there's a number of ways that NLP does modeling, and I found one that fit what I could do and what I wanted to do, which is you need to find a number of people who do something well, so who trade well. You find out what they do in common. So we have things like how do you develop a system? What are the tasks of trading itself? Things like how do you achieve your objectives? So we look at all those different kinds of things that people do, and we say, well, what are the tasks involved? There's 3 ingredients for each task, which are beliefs, mental states, and the sequencing of your thoughts, which we call mental strategies. That's pretty much what I do. The models are not necessarily real. There could be better models that come out, but they're very, very useful, and they help a lot of people. I'm into useful, not real.
And that was the first life lesson that I took from you is you talk about beliefs. And I learned with you that if you stop judging your beliefs and you can see them objectively, then you can choose what works and what doesn't work for you.
When you begin to say I'm a trader, it's actually an identity shift. So there's a lot of things that have to change before you can really become a trader. Back in the day when I first started modeling, people were talking about money management. And I'm going, well, money management could be managing your finances or managing other people's money, or they could call it asset allocation as well, where the real key to asset allocation is how much is in each asset. But the meaning behind all of it was how much. So, I basically coined a new word, position sizing, and then we didn't think to do a trademark on it. And then when I tried later, they said, oh, well, this is everyday language. You can't have a trademark on that.
Yep. Everybody uses it now. And it's the key to 80% of a success of a trader, right?
Right. But we've had a lot of processes that have come out of modeling, such as the impact of mistakes, focusing on reward to risk ratios instead of being right, which means you define your initial risk as R, and then you think in terms of the R multiple of each trade. So profit or loss is a function of your initial risk. A 10R doesn't mean your investment went up 10 times in value. It means you made 10 times what you were willing to risk on the trade. And that's a lot easier to do than have something go up 10 times in value. Other words like expectancy, expectunity, the system quality number, the impact of market type, et cetera, et cetera.
Just to simplify this a little bit more for people that don't know much about trading is you see the world, your belief system, I guess that's what we're trying to describe here. You see this more like, could it be a mathematical process of risk reward?
Well, it could be. We get indoctrinated in the schools because, you have to get at least 70% right on a test to even pass it. So we get indoctrinated to need to be right. And you can be right less than 50% of the time if you make 3 times your money every time you're right, and you only lose what you risk when you're wrong.
That describes it super well. So you can still lose most of the time, but when you win big, you make money.
Sometimes people get in and they just have an incredible edge that nobody else has at the time they come in. It's not like a Holy Grail, but like Ed Seykota was a computerized trend follower who understood markets, money, position sizing at a time when the commodity markets were in huge uptrends and nobody else had that edge.
What was his track record? I remember he's called the Bill Gates of trading.
I don't know. I worked with him for a couple of years, and I know his wife once told me he wouldn't talk about what he was worth or anything. His wife once told me that he basically controlled 2 brokerage houses at the time. You never see him listed anywhere.
Yes.
In terms of what his worth is.
Yes, I think he made a video on YouTube, though. A very interesting song.
The Whipsaw song? Sure.
Exactly, yeah. For anybody out there, you should Google that. But yeah, interesting character. So your objective, you say, is not making money.
Yeah, it has everything to do with transformation. So, for example, David Hawkins has a scale of transformation that goes from 0 to 1,000. Which it's a log scale. The dividing line between positive and negative is at 200 on the scale. Fear and greed come in at like 125 and 100 on the scale. And you know what happens when you trade out of fear or greed. I think you need to go to about 350 on the scale, which is acceptance. But I don't know that those numbers mean anything. So I like to think of consciousness as 4 stages. Fear and greed is where things happen to me. And then the second stage is where things happen because I seize control. So it's kind of a power thing. And then the third one is things happen through me because I have a purpose and mission and I'm following that. The fourth stage, which very few people get to, is everything is me.
I know you have a process to go to different conscious levels, right?
Well, it's everything we do. You start clearing out all the negative stuff inside of you, your consciousness tends to go up. What you might be getting at is I recently did a streaming video, which I called Trading Genius 2. The process behind it, what's behind it is that all our experience is basically an internal subjective experience. It's not real, even though it seems real. So, and I can prove it because if you look at what's got to be out there in the world, has to be things like electromagnetic vibration. And then what happens is our senses have to translate electromagnetic vibration into electrochemical energy. So, for example, you have cones in your eyes that would transform a 650 nanometer light wave into a certain sensation. And then when you get to a language filter, and it's called red. But there's no similarity between the word red and the vibrations that are out in the universe. And anybody can figure that out. By the time we're 5, we know a language and it's shaped our brain so that we can think in that language. But language tends to divide the world into subject, object, and verb, which really isn't out there. It doesn't exist except because of language. So, if everything's one, which is hard to understand for most people, you're not going to know that because language just separates it. I mean, I think Sanskrit is the only language that doesn't have an I sense, but all the rest have that quality of separating the universe into subject, object, verb. So any kind of verb, we can take that verb and basically turn it into a noun. So let's take an example of the market. The market is a process. It's a process of people getting together and doing buying and selling. But we basically take it and turn it into a noun, then give the noun all sorts of characteristics, none of which is real. The closest approximation you might come to representing the market is a bunch of tick dots, but we don't like that, so we might turn them into tick candlesticks. Well, now you're giving some importance to 4 dots, the first, the last, the open, and the close of a time period, which you're setting arbitrarily. And then maybe you can't make any sense out of that, so you start drawing lines and indicators and patterns, and pretty soon you're doing all kinds of crazy things that have nothing to do with the market. So really what you're doing is you're developing a bunch of beliefs about the market, none of which are true, but some of which can be very useful. If you become aware of that, the utility of the beliefs, then you begin to get into, and knowing that none of them are real, then you can begin to get into what's potentially the Holy Grail of trading.
Being present, reacting.
I have a belief, for example, buy what's going up and sell it when it stops going up.
Okay.
That's pretty simple. Well, I could make that. So let's say I'm doing the stock market. I'm going to say find the strongest sectors and buy the strongest stocks in the strongest sectors. And then you go, okay, that makes more sense. So you have, the strongest sectors probably have some fundamental reason behind them. And you find the strongest stocks, they're likely to go up for some time. And then you say, well, how do you know when it stops going up? You could say, is the market, is this big correction we've had because of the coronavirus, or what people deem as a belief to be due to the coronavirus? Does that mean the market stopped going up or what? So you have to have a definition of what's useful for you, or when the market stopped going up. Then that becomes a system, and you have to figure out under what context. So every belief. So let's talk about beliefs for a second, because no belief is 100% true. They're just useful, and they're useful when they bring value. And my definition of value means they bring value not only to me, but to a lot of people, and in as wide a context as possible. An example of that, you might go, well, I don't believe that. It's a fact. If you jump off of a 20-story building, you'll go splat on the ground below and make a mess, and that's it. That's a fact. I'm going, no, it's a belief. And the context in which the belief is true is pretty wide. It means you live on a planet like the Earth that has a certain amount of gravity, in which that's a likely scenario. But even then, there are people who fall higher and they don't die. So it's a function of, it's a useful belief for a lot of people, and that's the kind of thing you want to trade. And a lot of people have beliefs about indicators, which is absolutely ridiculous. I'm going to buy, I think I'm going to buy and I'm going to sell when there's a divergence. Well, that's a belief about a bunch of indicators.
Uh-huh.
And I think the more removed you are from the original representation out there, the more trouble you're likely to get into.
When you have beliefs, you could also have limiting beliefs. And
a limiting belief is a belief that is useful under a very narrow context and doesn't have very much value.
Mm-hmm.
When you were a kid, your mom didn't show up, presentation you had in school, and you go, my mommy doesn't love me. Well, that's a belief that you formed in that instant, and it maybe gave you an explanation. It wasn't a useful explanation, but it gave you an explanation why mommy didn't show up. Generally, if you just kept that, that's a non-useful belief.
I saw a video of you decades ago, and your message is very consistent. That's one of the things I'm really impressed about you. You had a lot of clarity since the beginning of your career. You used to say trading was 80% psychological. Now you say it's 100% psychological. Why?
Well,
Because of that.
When I said that was 100% psychology, it just came out of the modeling, because there's three ingredients for modeling, which are beliefs, mental states, and mental strategies. And those are all psychological things. But if you understand what I just said, which is, you can never know the outside world. You can only know your representation of the outside world, and your experience has to be a projection into the outside world. So it's all you creating it in some way.
That's really deep. I think I understand what you're saying. Let me ask you something else, a little more basic. You mentioned once to me, if you don't write your criteria down, if you don't have clear rules for trading, then everything you do is a mistake.
Correct.
So that means you have to believe in a system and follow that system.
Right. And you have to have a set of rules that will guide you. And if you've proven that the system is useful in a certain context, this context would be a certain market type, and it works for you and it fits you, then you can probably trade it.
Mm-hmm. But it's almost impossible. Well, you did teach me this. You need 3 different systems, right?
Well, at least 3. There's at least 6 market types, which is up, down, sideways, under quiet and volatile conditions. And you can't, it's pretty easy to design a system for any one of those market types, and it's insane to assume that it's going to work for all market types. Mm-hmm. And most people want one system, and then they try to tweak it when the market type changes, and it doesn't work.
So, by the way, I wanna mention here that if anybody's listening to this right now, you should go into Tharp.com and register for the free newsletter. I think you write a newsletter every 2 weeks?
Every week.
Every week.
The latest one came out today.
Oh, great. And you update the market type too. You have some beliefs about, how to classify each market.
Right. And I think today's newsletter has the link to the podcast I'm doing on Friday at noon.
I'll put it on the links for sure. How do you create trust on that 3, 6, 9 systems that you've developed? How do you know when to use each?
Well, first of all, you have to have some sort of convincer strategy to convince you that it works. And that's all subjective. It's all made up. It's basically based on what I call submodalities. So some people would have to hear, some people would have, they could say, oh, Van's an expert. If Van says it works, then it works. And they might trust me, or they might say, well, I have to understand how it works and then hear an expert say it works. Or you might say, well, I have to see it for myself. So they go to a show and they see some computer, and you're supposed to buy when the green arrows come and sell when the red arrows come. And they see 50 examples of trades where the green arrow is lower than the red arrow. So they make money and they go, oh, I want to buy that software because they've seen enough examples. Well, these are all examples of different people's convincer strategy. And they're all kind of ridiculous. You have to have some strategy to decide when it works. So my strategy would be to really understand your beliefs and understand the limitations of the beliefs and when they work and when they won't.
Easier said than done, right?
Correct.
You do that you have a super trading program too. And I guess that's what you do through 3 years. It's work on those beliefs.
There's 3 programs in it. Super Trader 1 is where you clear up your psychology. Super Trader 2 is where you develop a business handbook or business plan for your trading. Super Trader 3 is where you develop the systems and prove you can trade it at least 95% efficiency.
And that's not easy task. When people come and say, or ask me, hey, I want to do trading, what do I have to do? I really I freeze, because it's like somebody asking, hey, how do I become a doctor? I think you will agree with me that people get confused because they can open an account for $200, $500 and start clicking.
I've always said that if trading were easy, big money would make it impossible for you to trade. They'd have rules and regulations in place that said you have to pass this test. The test would be very, very, very difficult. And if you passed, it would allow you to work for them, which means you could trade the markets for them and make them money. But trading isn't easy, so big money makes it very easy for you to get in and has lots of ways in which you can give them money.
Yeah, I agree 100%. If it's easy, everybody will be doing it, and then it will stop being easy or profitable.
It seems funny, but when it's the easiest to make money, you probably see the fewest people participating in the markets. In 1999, you could go into any bookstore and there were rows and rows of books on trading and all sorts of things. Now there's maybe one bookcase with about 10 books that'll have maybe Robert Kiyosaki and a Tony Robbins and maybe a Jack Schwager or something in there. None of my books will be in there. That's it. And we've had this huge bull market, for at least since 2009, and hardly anybody's participating in it.
That's interesting. So are you telling me that as you and as an educator, most of your business comes when the market crashes and everybody wants to learn, but when there's a bull market, everybody thinks that they're a genius? Is that it?
Well, no, I think I put myself out there with saying things like I've been saying here, which to probably 75% of the population would make them think Van's really kind of weird. Not sure I want to have anything to do with him. So I appeal to a certain type of people who really, what I say makes sense, and they really want to work on themselves.
That's true. Okay, I understand. Very good. When do you think somebody should start in this, let's call it a venture? When somebody should say, well, I have this amount in savings and I want to be a trader?
Well, I think if you've got 20, 30,000, I'd spend it on your education first, because otherwise you just give it all back to the markets. So I don't know there's a good time, but if you're committed to treating it like any other occupation, if you want to be a doctor, you've got to go through college education and then medical school and then internship and residency and all of that sort of thing. And, then maybe you learn to operate on somebody's brain. And what happens with trading is it's like, here's a scalpel, here's a patient, go operate on his brain. You need the education that it takes to become aware and competent first.
Yeah, and how long will that take? In order to master something, it takes a lifetime, right? How long does it take, in your experience, for someone to say, I feel comfortable with this? And everybody's different, I understand that.
I'd be making up something if I said it takes this long. They've had that thing that said competence takes 10,000 hours of practice. Well, you could have 10,000 hours of practice of incompetence. So that's not necessarily even true.
Practice creates permanence. It doesn't make perfect.
Right.
So what is the Holy Grail of trading? You mentioned that before.
I used to say it's you, and now I think it's a combination of what I just said, that you only trade your beliefs, which of course is you, high-level thinking, systems thinking, beyond the matrix thinking. And that's quite different from, say, knowledge has evolved from an authority paradigm where, say, the king or the church and the early Greeks were right, and nothing could really contradict them, to the scientific model, which basically says you can take things apart, figure out how each part works, study one variable in isolation, and find a lot of things. But it turns out you've always got some assumption, and the assumption's wrong. So science models evolve every 25 years or so to systems thinking, which really came out of things like quantum physics and more advanced things, which says everything influences everything else, and the subjective is important as the objective, to what I call beyond the matrix thinking, which is getting advice from your internal guidance as well. So I think the Holy Grail is a combination of systems and beyond the matrix thinking combined with you only trade your beliefs.
Perfect. Well, thank you very much, sir, and wish everybody go and start reading Mr. Van Tharp books. I think you have 11 right now. Visit his webpage. Prepare yourself, because trading takes a while. It takes a long time. It's not about indicators. If you're doing that, if you're looking for indicators at work and stuff like that, you're just starting out and you have a long way to go. Thank you very much, sir.
You're most welcome.
I appreciate it. Thank you for your time. It's truly an honor to talk to you, sir.
It was my pleasure. Thank you.
Thank you. Till the next time.
Did you learn something today? How can you apply your insights? What's next for you? The fastest way to make things happen is to just share this podcast episode with more people that may find it valuable too. Talk about it with them and surround yourself with like-minded people. Hope you found this valuable. Don't forget to subscribe. See you next time.